Let's get right to it. Are you paying your vendors faster than your clients pay you? Because if you are, you're not running a construction company. You're running a one-way cash pipeline from your bank account to theirs. That's where the accounts payable turnover ratio comes in. It tells you how often you're paying your bills and whether you're being responsible or just trying to be the nice guy that cuts checks before the job even starts. So what is the accounts payable turnover? It's calculated by taking your cost of goods sold divided by your accounts payable. So let me break that down. Your cost of goods sold is what you spend on your job-related costs, your materials, subs, rental, freight, labor you don't W-2. Your accounts payable. That's what you owe right now. Open bills to vendors, suppliers, and subcontractors. So if your cost of goods sold is $1.2 million a year and you've got $200,000 in payable, that's $1.2 million divided by $200,000 equals 6.0. That means you're paying off your vendor bills 6 times a year, or about every 60 days. If that number jumps to 12.0, you're paying your bills every 30 days or faster. And that's the red flag, because while paying on time is good, paying too fast can choke your cash flow. So here's a construction analogy. You buy $40,000 worth of lumber on a net 30 account. Instead of waiting the 30 days, you pay it off in 7, just to be responsible. Meanwhile, your invoice to the GC isn't due until the end of the month. Payment won't show up for 45 days. And your crew still needs to get paid this Friday. Now you're short on cash. Not because the job lost money, but because you paid faster than you got paid. What's a good AP turnover? Let's be clear, this isn't about paying late. It's about paying smart. If your ratio is between 4.0 and 6.0, that's responsible and efficient. If it's between 2.0 and 3.9, you're holding on to cash longer. That's good if you're not burning bridges. If it's between 6.1 and 9.0 or more, you're likely paying bills too fast and hurting your cash flow. And if your days sales outstanding is longer than your days payable outstanding, you're floating your clients' jobs with your own cash. That's a bad deal. Here's a real contractor example. Had a subcontractor paying every invoice in 7 days, even though vendors offered net 30. He said, "I like being squared away. Feels clean." Sure, but what else was happening? He was pulling from his credit line to make payroll. He had no working capital buffer. He couldn't put a deposit on a new job without dipping into his personal account. We checked his AP turnover. His cost of goods sold, $1.5 million. Payables, $75,000. That meant his turnover was 20.0. That's every 18 days. Way too fast. We coached him to pay on day 28, not day 7. Prioritize critical vendors. Stretch your non-critical terms to 45 plus days where possible. His accounts payable turnover settled to 5.8, and his cash flow immediately stabilized. So how do you improve or slow down your AP turnover? Well, number 1, use the full payment terms. If it's net 30, take the 30. Don't turn it into net 7 because you feel guilty. Number 2, batch your bill payments. Pay once or twice a month. Don't nickel and dime every day. Number 3, communicate with your vendors. Let them know your payment cycle. Many will work with you if you're clear and consistent. Number 4, match your accounts payable to your accounts receivable. Try to time your outgoing bills with your incoming payments. That's cash flow management 101. And finally, number 5, avoid early payments unless there's a discount. Paying early without an incentive is cash flow suicide. So here's the final word. Accounts payable turnover tells you if you're being disciplined or just reactive. You don't win this game by paying bills fast. You win by paying them strategically and keeping your cash in play. Because in construction, cash buys time, cash funds labor, cash keeps you out of debt, and cash protects you from job delays, bad clients, and the next curveball. So ask yourself, am I paying fast to feel responsible, or am I paying smart to stay in business? Because if you pay too fast, you might impress your vendors, but you'll bankrupt yourself in the process.